Diwali is a time of new beginnings, sparkly lights, happy reunions and celebrations. It's also considered an extremely auspicious time to buy gold. The ritual of buying the yellow metal during Diwali, especially Dhanteras, is the equivalent of inviting Lakshmi, the goddess of wealth and prosperity, home. Today, I'll tell you what are the different ways of buying gold so that you are able to continue the tradition and make some returns as well. Let's first look at the benefits of buying gold and why it's so popular in India. Aside from the religious significance, it offers one of the best hedges against inflation and is usually the safest form of wealth, especially during any kind of financial crisis or economic uncertainty. However, you must remember to ensure that your gold holdings in whatever form does not exceed 10% of your overall financial portfolio. There are several ways in which you can buy gold and make some returns on it. One of those ways is buying gold ETFs, which several asset management companies offer. These exchange-traded funds closely track the price of gold. 1 unit of a gold ETF is equivalent to 1 gram of gold. So it's literally like owning gold without physically holding it in your hand. And the best part is that since gold ETFs are traded on the exchanges, you can sell it at any time just like you would sell a stock. Another option is investing in gold bonds. The government recently launched sovereign gold bonds, which not only give you the benefit of any price rises, but you also get the added benefit of returns. Gold prices can often remain subdued for extended periods of time where you might end up losing money. So this is a great way to overcome that. In fact, the government is launching the 6th tranche of gold bonds just in time for Diwali, where investors can buy securities worth up to 500 grams. Applications for this tranche is open from the 24th of October to the 2nd of November, and bonds will be issued on the 17th of November. These bonds will have a tenure of 8 years with exit options from the 5th year. The interest has been fixed at 2.5% per annum. These bonds can also be used as a collateral for loans. You can always opt for the traditional gold coins, bars, and even gold jewelry. This makes sense, especially if you have a wedding that's coming up. It's always better to buy gold jewelry if you're going to wear it and not if you're going to lock it away. In case of the latter, you're much better off with either gold bonds or gold ETFs. Another point to keep in mind is that gold prices have moved up by about 25% this year, although in the last 1 month it has seen some correction just in time for the Diwali season. But joining me now to understand better about where gold prices are headed from here on is Vijay Jain, CEO of Orra. Thanks very much, Vijay, for joining in today. So I want to start by asking you, how has the demand been this time round and how much has the recent fall in gold prices that we've seen contributed to that?
So the interesting part is if you look at it both in India and globally, the first half of the year is largely been driven by financial investors or investments in ETF.
Right.
And if you look at it, the first half of the year was really slow in terms of demand, given the overall slowdown in consumer demand in India. But second half, I think a lot of positive things are happening. You've got the 7th Pay Commission, you've got the expectation of a good monsoon, and therefore we are seeing a much higher footfall.
Right.
The other interesting part is we've seen whenever gold prices tend to go up, at that point of time, there's a hesitation in the consumer's mind. The fact that the prices have gone up to as high as 31, 32,000 and now they're coming back to 28, 29,000, I think our expectation is that the demand would be very, very good.
So far this festive season, what's been the trend? Anything interesting that you've noticed as far as consumer action is concerned?
So interestingly, this time after ages, we are seeing a demand for bullion as well.
Okay.
And I think a large number of jewelers are giving great offers. For example, we are selling bullion at the price of gold. So there's effectively no making charges. In addition, I think this is perhaps the first year in a decade where the kind of offers which are being offered right across, whether it's gold, diamond, the entire segment is really huge. So our expectation is that demand would be very high. The other interesting part is that we are seeing larger number of people coming versus earlier when we saw fewer people buying larger value. Right. This time we are seeing a large number of people buying smaller value.
And as far as gold prices are concerned, I mean, it's been a great year for gold after quite a few years of being quite tepid. From here on, how do you see the gold price trajectory moving? What can investors really expect?
So I think from a slightly longer term perspective, we are fairly positive. If you look at it, when I entered this business in 2002 to today, gold prices are up almost from $200, $250 to close to $1,300 an ounce. But in rupee terms, it's actually been substantially more. It's almost close to 6 times. And the reason being is that there's a dollar-rupee depreciation. Given all the uncertainties in the market, whether it's political, it's social, it's economical, we believe that from a slightly longer term perspective, gold has a very, very large opportunity in terms of price movement upwards. You might see some amount of volatility given the fact that the Fed is going to be making announcements in interest rates. But we believe that's really a short term thing. And from a slightly longer term perspective, we remain very bullish.
So those are the different ways in which you can buy gold this festive season. Hope it helped you decide which option works best for you. If you like this video, don't forget to like, comment and share. And here's wishing all of you a very happy Diwali and a profitable new year. Thank you so much for watching.